Welcome back. This Thursday, May 7th, 2026, isn't just another date on the calendar. It is the start of a 48-hour window that will define your portfolio for the rest of the year. We are currently seeing markets hit record highs, but don't let the surface fool you. Underneath, there is a massive shift happening. The S&P 500 and Nasdaq have been riding a wave of semiconductor euphoria, with ETFs like SMH up over 27% year to date. But the shock factor is here. The market is now pricing imperfection. If these companies don't just beat earnings but provide a clear AI narrative for the future, the fragile foundation we're standing on could crumble. We're talking about 20% of the entire S&P 500 reporting in a single burst. Let's dive into why this week changes everything. 2. The AI infrastructure boom. For the past year, everyone was obsessed with the picks and shovels, the chips. But as we head into May 2026, the focus has shifted to the walls and wires. Data center revenue is projected to skyrocket from $416 billion to $624 billion to support generative AI and smart grids. This is why I've been pointing you toward Dtcr, the Global X Data Center ETF. While SMH is great, Dtcr captures the digital infrastructure, companies like APLD and Nebius, which is up a staggering 77% year to date. The lesson for this Thursday? Don't just watch NVIDIA. Watch the companies providing the power in the physical space. If the infrastructure growth slows, the AI revolution hits a bottleneck. This is the hidden side of the AI trade that smart money is moving into right now. 3. The monetization reality check. We are officially done with the AI hype phase. We have entered the monetization phase. The market is performing a brutal reality check. Look at what happened with IBM and ServiceNow recently. ServiceNow met expectations, yet the stock dropped 12% because of weak deal flow. Why? Because enterprise software is feeling macro pressure. Investors are asking one question this week: how are you actually making money from AI? For Microsoft, the focus is on Azure growth and Copilot revenue. For Alphabet, it's about whether AI is hurting search margins or boosting YouTube engagement. If these giants show that AI is just a cost without a return, expect a massive revaluation of the entire tech sector. The bar isn't just high, it's astronomical. Hit the subscribe button and turn on notifications. 4. Consumer cracks versus strength. While tech dominates the headlines, the consumer is the engine of the economy, and we are seeing some serious cracks. This Thursday, we need to watch Starbucks as a bellwether for US and China demand. If people stop spending $7 on a latte, it's a sign the higher for longer interest rate environment is finally biting. We also saw record Q1 revenue from American Airlines, showing travel demand is holding for now. However, there's a looming shadow: oil prices. Geopolitical tension in the Middle East is keeping oil volatile. If oil surges, it eats into airline profits and consumer wallets simultaneously. We are looking for defensive positioning in the markets, investors moving into safer havens as the fragile surface of the market begins to show its age. 5. The 48-hour mega-cap window. This is the main event. In the next 48 hours, Microsoft, Meta, Amazon, and Apple will all report. This cluster is dense enough to move the entire market direction single-handedly. Meta is the one to watch for advertising strength and AI ad targeting improvements. Apple is the wild card. Their China sales and iPhone demand trends often move the entire index sentiment. If Apple misses, the Nasdaq is in trouble. We've seen intraday pullbacks and creeping volatility leading up to this. The market is headline-driven right now. This means one bad sentence in a CFO's guidance could trigger a 10% swing. Stay alert, stay diversified, and remember that beating earnings is no longer enough. We need future-proof guidance. 6. The crypto and energy angle. Finally, we have to talk about the synergy between AI, Bitcoin, and energy. Bitcoin has been showing solid growth, and digital asset platforms like Nexo are becoming essential for managing this wealth. But the real story is power. AI data centers require an ungodly amount of energy. This is why Bloom Energy is on our radar. Their hydrogen and clean energy narrative is the backbone of the AI expansion. As we look toward the rest of May 2026, the energy angle is the hedge against a tech slowdown. If you own the data centers and the energy that powers them, you are insulated from the volatility of individual software companies. Keep your investing simplified, do your own research, and I'll see you in the next video to break down the aftermath of this historic week. 7. Call to action. Video poll question. What do you think will be the biggest market mover this week? A. Microsoft and Meta's AI profitability. B. Apple's China sales and iPhone demand. C. Rising oil prices and geopolitical risk. D. The shift from chips to energy infrastructure. Disclaimer, I am not a financial advisor. This video is for educational and entertainment purposes only. Always perform your own due diligence before investing. If you want to stay ahead of the 2026 global markets, hit that subscribe button and turn on notifications. We track these market shifts every week. Join our channel membership for more content and interactions. Check the link in the description for our limited time broker offers. See my two broker offers. The sign up bonus are for new traders. Merch, grab a hoodie in our store, link below. Thanks for watching. Share this video to help others understand the markets. Stay grounded, and I'll see you in the next video. Videos are regularly dropping on Mondays and Thursdays. Farewell.
This is the stock market performance playlist, the sound of victory. Peace.